it warms my heart to be here, particularly because of this partnership. We think so much of Council More and what they're doing to affordably be able to help you each do more of what you do well, by consolidating a lot of the business processes and tools that you need for your clients, the students and their parents. So I'm so happy to be here, and Patrick would say the same. So I've already been introduced. I've worked at various high-cost colleges. I've also worked in a lot of educational finance and technology companies as well. So I'm bringing that experience with me. And I have a lot of friends in this community. So we've been having a lot of discussions just like you have. A lot of times I like to start with quotes. I love quotes. And when I was preparing for this session, I came across this quote by the director of the Hope Center of College, Community and Justice at Temple University. Emergency aid is critical as a critical resource for students facing economic shortfalls that can disrupt their education. Well, this really speaks to me so much as I'm reflecting on the current economic times. I want you to know that if you've submitted a question ahead of time, I've tried to incorporate some of the responses to those in the comments that I'll be addressing. Some I'll also be addressing directly to the person who had the question based on the nature of it as well. So the CARES Act, stimulus checks is where we're going to start out with. You know and love, hopefully, hearing the information when the Coronavirus Aid, Relief, and Economic Security Act first told us that they were going to give citizens checks. But let's talk a little bit more about the winners and losers of this, because it's not, it doesn't mean that everyone gains from it. The good news is that if you have a dependent under the age of 17, then you may in fact be getting an additional amount of money for them. For married couples with $150 adjusted gross income on their latest tax returns, so latest meaning 2018 if you have not yet filed for 2019, particularly since the date is now July 15th, or some who are doing their taxes already, then basically that couple will get $2,400 plus $500 per kid. Now, this amount will graduate out by the time a married couple has an adjusted gross income of $198,000. And so if you're looking for more details to kind of look, I love this Smart Assets coronavirus stimulus package infographic. I think it's been a great resource when I'm telling others where it is. So it outlines those things like head of households versus the married couples, because of course the amount is different. It's $112,500 adjusted gross income, and it graduates out at $135,000. Now, other winners in this stimulus checks also include those who do not have dependents of their own and are not claimed as dependents by other people. So for those people, the stimulus check is that $1,200, and it graduates out at around $99,000. So that means that when I say graduated out, I should clarify, that means that you won't get the whole $1,200 check. You'll get a smaller portion than that. Now, there are losers when it comes to the stimulus checks, and I think this is affecting a lot of your clients. Those whose dependents are already over 17 are ineligible to get this additional $500 stimulus check. So that also includes any of your existing and former clients who were college students ages 17 through 24 who can be claimed as dependents on their U.S. federal tax return, but are not eligible for these funds. And so the students themselves, even if they file separately, they can't get the $1,200 check either. I love to have references for some of it, and so another plain language explanation for those who are having to communicate the why or being asked for resources. I really love the way Vox actually talked about this. There are other articles, but I just felt like it was very straightforward. There are a couple of options if you're in the losing category. One is the primary one is to weigh out the pros and cons as a family for whether or not you should continue having that college student or 17 or older student as a dependent. A lot of times the answer is still going to be yes, you should still claim them, but I want you to at least know that there are families who are having discussions. So that may affect what their filing status is for 2019, or that they could actually refile their taxes. Now, I'm also a true advocate for education, and so sometimes when I see these different petitions that are out there, I think you could join the fight to actually ask the federal government to do more. And there are two different petitions that are either addressing the stimulus or just addressing college student aid that might be of interest there. Yes, the government has taken some actions, but they may be taking additional ones. So I think it's still worth addressing. So before I continue, I'm just going to check in with Margaret and Mo from her team just to see if there's any other questions that are out there.
Hey, Colleen, this is Mo. There have been a couple of questions or comments coming in. Right now, there's just a question on the getting a recording of the webinar, so we can address that later. So you can just keep going at this point.
Okay, great. I will be doing periodic checks like that, so that way it can continue the flow. This is being recorded, so that's a great resource for you for later. We can also make the presentation slides available. Now, within the CARES Act, there are a series of student loan provisions within the Act. And so now I'm going to be talking about this piece of it. Now, there's great news for this. There are a lot of winners and what I call automatic winners, because right away after March 13th, if through September 30th, people are automatically having the interest rate on federal loans as 0. I am cautioning you that this is not all loans. So I'm going to be talking right now about which loans are included. So first, we include federal direct loans, as the federal government calls them, non-defaulted and defaulted loans. So when I'm referring to federal direct loans, these are federal direct subsidized and unsubsidized student loans. These are also federal Parent Plus loans. These are also federal Grad Plus loans for graduate students. So all of these categories, basically no payment is required for these loans. It also includes several older federal family educational loans, FFEL loans, that were borrowed after 2019 that are in that defaulted or non-defaulted status, as well as any federal Perkins loans owned by the Department of Education. Now, I'm just going to tell you, I'm going to focus right now on the winners, but I'm going to come back to FFEL and Perkins loans because not all of them are included. In fact, around 9 million borrowers who have these type of federal loans were not included. And so we'll be talking about that in a little bit. If you want to read what the actual provisions are with the Department of Education, we have this resource. I also really like, surprisingly, not surprisingly because AARP has great information, but I was really pleasantly surprised that they were the one that I felt like most clearly outlined what was included and not. There are more winners. So if you are a current student who is borrowing or current parent who is borrowing and is in school or in what we call a deferment period, that is a status which grants you non-payment of your student loans, basically for economic reasons. It can be for some type of employment reasons. Those students who have these loans no interest is accruing. Well, some of these loans are already subsidized. And if they're subsidized, it really may not feel very different for you. But if you have an unsubsidized, it's going to feel different because you're going to benefit, and it's going to feel like that unsubsidized loan for this period of time from May 13th through September 1st makes your unsubsidized loan look much more like a subsidized loan. No interest is accruing. So this is one of the other benefits that current students are receiving, and some borrowers who are in repayment who are getting deferment. So they're among the winners. I also like to outline is that people who are in the midst of applying for the Public Service Loan Forgiveness Program. In that program, in order to qualify, you have to make 120 on-time payments. Because these loans are the loans are in the suspension state, I'm glad to report that basically these 6 months are going to be considered as qualifying payments towards that 120 payment threshold. So if someone is in repayment, and of course, if the Public Service Loan Forgiveness Program continues, because sometimes it's under threat by the federal government, then this is actually a very good thing for those people. More winners, people who are in forbearance. Now, forbearance is a little bit like deferment, where basically you don't have to make a payment on a loan while you're in this status. However, this could be from everything from I can't make a payment because I had a car accident and I have a lot of money going out and it's very temporary, to some others when they've exhausted other forms of the maximum eligibilities for deferments are thrown into forbearance. So people who are in forbearance right now, both the subsidized and the unsubsidized loan, the interest is actually accruing during this period of time and is typically capitalized once prior to entering back into repayment. So the good news is for these people, the interest is being picked up during this period of time. However, the federal government has not commented on whether there will be one or more interest capitalization periods, since they may be in the midst of, if they were already in forbearance for a period of time prior to this, we don't know if they will do more than one interest capitalization. My hope is that it's going to be to the benefit and will minimize the level of interest capitalization. Even people who have failed to make payments on their student loans, despite all the terms and conditions that are out there, the federal government is also picking up the interest on their subsidized and unsubsidized and not requiring payments. They get an additional benefit because to actually, if you've been defaulted, to get yourself in a good status again, depending upon the time and type of loan that you borrowed, it will take, if you make payments for 9 to 10 months, you can rehabilitate the loan, meaning it will no longer be considered in a defaulted status. So for that, this means that basically if someone could use this to kind of rehabilitate their loan, get into a better status, and maybe only make 3 to 4 more payments on time and actually no longer be considered in default. So that is a really exciting option for me. But of course, as in many things, there are losers. So for the Federal Family Educational Loan Program borrowers who borrowed prior to 2010, basically you're still in repayment on the interest and principal, just as you ever were. And for federal Perkins loan borrowers whose lender is typically the school, because it's a funding that was given by the federal government joined by the schools themselves, you are still responsible for the payment. We're also going to be talking in a minute or two about the different options for these borrowers, but this has created confusion because some people didn't think they have to make payments and could be having negative effects on their credit reports because they thought they got something automatically and they didn't. So we'll make sure that we talk about what to do if you're in those statuses. They are not the only losers. Also, if you've borrowed a private student loan, either solely in the student's name, which there are a few of those that are out there, but the majority of them have co-signed loans between typically a student and a parent, or it may be someone else in their lives, or private parent loans. Private parent loans are loans similar to the federal Parent Plus loan, which are in just the parent's name. So these are educational loans, but also do not have any automatic provisions and so their interest and payments are going to be out there. I'm going to be talking in a minute about those options as well for those borrowers. So if you have a federal loan that is not qualifying, one of these federal family educational loans, formerly known as Stafford loans and Plus loans, before it added the parent or the grad to the titles, or federal Perkins loan borrowers who are actually paying the college directly. The guidance is to ask the lender if they're offering any special options. There are some lenders and servicers like the Rhode Island Student Loan Authority, Navient, Discover, that are all offering special payment augmentation and interest-free payment forbearance. So some of them are offering special conditions and giving special periods of additional time period, but they are not automatic. You actually have to reach out to them. Some of them also require forms. Some other lenders in this category are basically just suggesting that borrowers use their other options that are out there all the time. Their economic hardship deferment, unemployment deferment, or generalized forbearance. So if someone is opting for those options, or if that's what really the lender is doing, you want to know, because some of these have a maximum period of time for interest capitalization, and also for the amount of time. Some of them are like 36 months for the life of the loan, and you want to know that you're using up some of that lifetime maximum for a deferment or a forbearance option. Now, one of the other options that's been out there, and I've seen some articles writing about this, is also, if you have a federal loan, you can consolidate under the federal direct student loan. I want to warn you that the window of utility is going to be coming up, because it typically takes around 30 to 60 days to go through the application process, from the point that someone completes it themselves to the loans being rolled up and then being put into the federal direct loan program. Once they are consolidated, they will automatically be put into that zero interest and zero payment status until September 30th. There is a cost, although it's fairly low. It's the weighted average of the underlying student loans rounded up to the nearest 1/8 of a percent. So that means that basically if you have just Perkins loans that are at 5%, the interest rate that is going to actually become 5 1/8%, and that is what you'd be paying from that point moving forward. So I'm going to pause. Oh, actually, you know what? I'm not going to pause yet. I'm going to also talk about private loans. A lot of private student loans and private parent loans, lenders are offering additional levels of forbearance, payment modifications, or simply waiving their late fees. This Business Insider article is the best resource that I've seen that kind of outlines it, but you really need to contact lender by lender. Most of the ones that I've seen actually require some written form of completion of a form or documentation in order to get this, and may still be going into their maximum periods of forbearance or payment modification. Just another warning is the Business Insider article has been brought up and down several times. So it was live earlier today, but that's also because they've been updating the article with what the changes are with some of the lenders. So if you are looking on a particular day and you can't find it, maybe use the Wayback Internet tool that I've used to actually go back. So Mo, I'm going to reach out again just to see if there's other clarifying questions that we have so far.
Hi again, Colleen, it's Mo. Karen did submit a question. I believe it was, so her question is FFEL after 2010 or 2019 question mark. So I think that had to do with the winner screen on the zero.
Okay, so FFEL is Federal Family, so I'm putting on the screen right now because what you see, let me get the pointer. You see the Federal Family Educational Loan. That's the name of the program. These are ones that are actually included. But what I mean is if you borrowed your Federal Family Educational Loan, which might have formerly been called a Stafford loan, or if you were a parent, it might just be a FFEL Parent Plus loan, or actually it was just plus loan at the time. It didn't, they didn't emphasize the parent piece. Then you are responsible for interest payments and principal payments right now. You have not gotten any relief from the CARES Act. Okay. So I'm going to continue on and talk about some of the CARES Act emergency grants for colleges. Now, the interesting thing to me is you may have heard that basically over 5,000 colleges received some level of emergency funding in the way that is specifically earmarked for emergency financial aid grants. There are some highly endowed institutions like Harvard that are refusing those funds, or even took the funds and are now sending them back because of some of the negative press that they have since they're so highly endowed. But the vast majority of colleges are taking the money. The suggested distribution that Secretary DeVos had given indicated that they should think about using the threshold of the federal Pell Grant of being $6,195 as a threshold. And it does say that it should be given to the neediest students. Every school gets to define this separately. So I like what Vanderbilt did. They were among the first who made an announcement how they were going to do the use the funding. They're giving what they quantified to be about 20% of their students, all who are on federal financial aid, both undergraduate and graduate students. They are giving $1,100 out to their populations. So there are definitely a lot of winners. Most schools are interpreting this for currently enrolled students. So this is not affecting people who are college bound. What they're going to be using this money for is really to actually help students who are currently enrolled. There are losers because of this. First of all, a lot of the school's definitions of neediest students, meaning the lowest income students, are who are being prioritized for this funding. And so the middle class families are often excluded from this. Also, there are students who don't get federal aid. There are students who may have all free money that's not, and therefore that's paying their costs and don't have to actually make payments, who won't see any of these money. And then we also have international students who are attending. This money cannot be used for them as well. So they have to be people who completed the federal, the free application for federal student aid, the FAFSA, and also have other forms of federal aid. So options for losers, appealing for aid, and I had a lot of questions about this. A lot of families are being affected by the economic conditions that have changed. So if someone is a current student, or if they are a potentially college-bound student for this fall, they should be completing the process to appeal for more financial aid. I'm going to take a minute to show you a new resource that was done by a series of nonprofits working together that makes applying for more financial aid a little bit easier. One of the questions that we were asked before this session began were, what are the outcomes of appeals? For some schools, that is where they're using their money. They're using this federal emergency assistance money, and they're actually putting it into people who are appealing currently. For others, they're relying on the type of funding that they already had available. And for some, they don't have a lot of money available right now. And so it really is not a one size fits all. It's really a depends. And so I'm going to go over here. This is, the link is actually going to be in the presentation on formswift.com. If you're on the, actually, I guess I'll go back for 1 second. When you come to the website, it's all about helping people to change their financial aid package. So feel free to review it. But essentially what you do is you identify the reasons for appeal. And for most of the people, this is going to be a special circumstances appeal because of changes to their financial situation. It actually will help you to create a document that can then actually be forwarded to the colleges and places like the NASFA, the National Association of Student Financial Aid Administrators, and others like NASPA, I think as well. We're also part of those who are trying to help with these forms. So basically, it's a plug and play. You can put in the date, you can actually indicate what the situation is. It actually give you suggestions for resources. So if someone had a job loss, it's going to say, hey, if you had your letter that told you that you no longer could work, or if you have an application for unemployment or some type of thing with your unemployment benefits, this can actually guide a family and make it much easier. So it's something you can work with them to use or just suggest on your own. So I'm going to come back to this, and then yeah, let's see if there's any other questions. Mo, any other questions so far?
Hi, Colleen. Yes, we have 3 questions actually. So I'm going to do one at a time if you want to
go for it.
Do it that way. The first one is from Linda, who says, can it be assumed that student/parent borrowers are being informed of these new provisions by the lenders?
Thank you. So yes, if you had, so I'm going to go back slide-wise, so that way I can kind of, if you were one of those who received an automatic interest rate at 0, these are loans that are federal government loans, but they actually have servicers. These are the people that actually are the ones who are contacting the students on behalf of the federal government. They're organizations like Great Lakes, Nelnet, and American Student Education Assistance, AES/FIA. So those are just to name a few. MOHELA's another one. They have sent communications out to let them know that it's automatic. For the winners, so you are being communicated to, plus if you had, as many do, have the money automatically taken out of your bank account, that ceased to happen. So you may not be receiving any communication from your bank, but you may be able to look at that on your bank statements. As far as the losers, some organizations like I mentioned RISLA, like Navient, like Discover have sent active communications. Many have not. So if you know of someone who has a loan, it may not have been communicated, particularly if you didn't have an automatic option. And so the best thing is to reach out to the lender itself.
Okay. Vera, and this may be addressed later, but Vera has asked, how do college students apply for the CARES aid?
So as far as the college students applying, for many, there's no application. So something like what Vanderbilt did, it was automatically done across for all students. For others, some schools are using appeals. So it would require that the family actually actively reach out to the school. I've seen a number of schools that have made statements or added communications on their financial aid sites to address this, but it's really contact the school's financial aid office for more guidance is the best course of action.
Okay, and then we have Elizabeth who's saying that she realizes this might be being addressed later, but she wanted to ask, is there a special tool for families who did not apply for financial aid and are now seeking aid due to changed circumstances?
Great question. I'm sure you're not alone in asking that. So just as a reminder, you can complete the free application for federal student aid as long as you are still enrolled at least half time at an institution. So if we're talking about someone who's in college right now and did not apply, the best course of action would be to actually complete the free application for federal student aid, and then also see, does the school require any additional forms like the CSS profile or have their own institutional aid form? So that's for in college current students. If you are college bound for next year, the actual advice is much the same. A lot of families thought they may be able to afford a particular college and may have experienced job loss, savings loss, or other economic conditions that are straining the family. And when that happens, complete the application for federal student aid. Do know that basically it really depends on the schools. I mean, you'll always be able to know and receive what federal aid you have available. Some states, though, may have requirements for state aid, and typically most states, their deadlines have passed and may not have an appeals mechanism because there's limited state dollars for some of their scholarships and grants. As far as institutional funds, once again, it's very dependent on the school. I know that I was asked a question that I might as well address right now. What if you were waitlisted at a school and needed to actually, and hadn't applied the first time? I would suggest that you actually complete the free application for federal student aid application, CSS profile, and any institutional forms, and reach out directly to the school to actually indicate it, that you're applying for aid now. If you're at a school that's like some of the ones I worked at that were need-based, like Pomona College, it wouldn't change the outcome of the amount of aid that you're offered. But they may also be using some of this federal stimulus money to actually do this if the student is currently enrolled. But if someone is prospectively enrolled, I have actually seen some schools who are using some of their endowed funds and are actually dipping in and taking out more aid because they feel that many of their community are going to need more money to go to college in 2020, 2021. So thanks, Mo, for those questions. I'm going to continue on with the presentation. Someone actually asked about this. I'm going to give you estimates for the student loan interest rates. Please stay tuned, though. Next week is the sale of the 10-year Treasury bill, which actually gives what the rates will be, even though they won't go into effect until July 1st. The actual interest rate is set on the May Treasury bill. So the estimates that I'm going to show you in the next two screens are based on the April 10-year Treasury bill sale. And so we've been looking at a lot of what the experts have said, and they're saying that basically it will be much lower, but this will give you a good estimate if you want to give something to a family this week. So if you're an undergraduate student, the interest rate is going to be at an almost historic 2.78%. Please remember that there are loan fees attached. The loan fees are not much, but it is 1.059% of the interest rate. The loan fees are going to be reset as of October 1st based on sequestration. A number of years back, in 2011, we started having loan fees that were tied to this. Well, there is some movement in the federal government to consider getting rid of the loan fees. I'm not sure if that will happen or not, but you should assume that there will be this fee attached and that an interest rate. So this is for both subsidized and unsubsidized federal direct student loans. So people looking at federal direct parent plus loans are also going to be surprised. The rate right now is 7.08, but right now, if we're looking at the estimate based on April, the rate would be 5.33. So quite a reduction in the rate. Now, there is a fee attached to parent plus loans of 4.236. That is, those fees are deducted at the point of disbursement. So instead of if you're borrowing $10,000, you're getting 236 less on that loan, and just to give you that as a gauge. Now, they're not the only loans that are going to go down. Private student loans and private parent loans for 2020, 21, the interest rates are going down. Now, I've put Nerd Wallet, I think has a really good, every month they update this and try to give some of the best rates that they know are out there. There are variable interest rates loans that I'm seeing as low as 1.79. Just as a reminder, that variable interest rates and the interest rates, any fixed interest rates that you get for federal student loans and federal private loans are almost always based on your credit score and indebtedness levels. So we're probably looking at, if you wanted that 1.79, somewhere in the the 800s that you're going to need for an interest rate. Fixed rates are going to be even lower still than the federal Parent Plus loans. We're seeing as low as 4.13. Now, if you have some of that really great credit history and great credit score, federal loans may be more expensive to you in some cases. So you want to make sure when you're talking to families that they understand and balance it. For families who are looking for the most affordable options, meaning just the cheapest option for financing, the option may be one versus another, but you want to make sure they also think about credit protections. The great example is right now, the federal government and the CARES Act included federal loans only in those that required no payment and zero interest. So that's a good example of how some of these federal loans can be great. But you need to think about it, and it's not a one size fits all. So these are some of the questions when I have families asking me about looking at federal versus private loans. I always talk to them about what is their risk tolerance. If they're basically want to know what their payment is going to be for the life of the loan, fixed interest rates are always looking good. If they're concerned about what may happen when they die or become permanently disabled, federal loans have provisions for this. Private loans, some do. So I've actually seen like College Ave student loans has a cancellation option if the borrower dies for a private student loan. So you want to make sure that you understand that risk tolerance and what that means for yourself and your beneficiaries. The lowest payment impossible, if you have excellent credit, private loans have no fees attached to them. The federal loan with a 4.236 rate can sometimes feel really expensive. And if you have another option that basically has no interest, then that is something you want to be able to talk to. Who will be responsible for repayment? Some parents want to have their kids have a piece of what it's going to feel like to actually help finance it. And so a lot of people look at private student loans, so it's a joint responsibility that's co-signed. So that's another reason why you might want to look. So Mo, let's do another check-in. What other questions do we have?
Oh, one came in just now. Will there be any help for those who already have loans to get a readjusted interest rate?
No. So basically for federal loans, the year that you borrow is what the interest rate is set at, and it's fixed for the life of the loan. So if you borrowed a federal direct student loan this year, the rate is set at 4.53%, and so it's set for the rest of your career. If you are a Parent Plus borrower for this year, it is 7.08%. We are estimating that parent next year, if they borrowed, would be 5.33%, and that would continue for the life of the loan. If someone took out a private loan, If they choose a fixed option, once again, it's very similar. It's going to be set based on the amount that you borrow for that year, and it will be fixed for the life of the loan. If you have a variable rate, then most variable rates are changed quarterly. And so that's also part of the reason why some of the private student loan rates will even go lower and lower, because they're set from the prior quarter. So some rates are going down right now. So hopefully that created some clarification. So I'm going to move on to another quote. High school seniors should receive help in how to think about student loans and how to make sure the education bought with the loans offers good prospects for repayment. I was really amazed when I saw that a basically Nobel Prize winner in economics actually even addressed student loans. So this is a good one to be thinking about. So just want to put out there that basically QuatroMoney has a free tool that basically helps people see all 4 years of costs. It educates people and can calculate, even so families who are prospectively looking at into what college costs. It can help them to compare financial aid packages and balance the type of savings and cash that they have. I'm just going to show a quick, yeah, actually I forgot to put in the same thing. So at QuatroMoney, it's free. It's a tool that you can use yourself or suggest to your clients. Basically, when you start now, typically you're just going to be asked for an email. You're in school that we're looking at. I'm just trying to show it to you quickly. So I'm just going to go into a particular package. You'll be able to do comparisons if you want to do more than one school at a time. You look at the 4 years of costs, and we're estimating for this for someone who's going to school next year. What you'll see is that basically costs will rise. We're using the College Board's percentage increase of 3% that has happened over the last decade. And then families can actually personalize the response based on their credit, who is borrowing, parent and student, college savings, and cash that they can contribute. And then you can actually see side-by-side comparisons based on the family's credit. So that way you can actually see, in this case, if this parent and student borrowed, so the student borrowed the federal direct student loan and the parents borrowed a parent private loan, I mean, you can see over $60,000 in savings that they could if they had excellent credit. But, you know, if that same family has just good credit, they're also going to see that they shouldn't even think about the private loans, because it's actually even more, you know, it's even $80,000 more expensive. So we actually have, if you look at the credit scores, a good idea that can give you ideas of what credit is considered for borrowing private loans. And if people want to dive into what that is for each year, understand why people choose this, they can do so and then send themselves a summary of this data. I've seen some independent educational consultants doing this on behalf of their clients, sending it to themselves, and then sharing it with their clients. If you're a data head like I am, you can actually even see the amortization charts, how we're doing the calculations, as well as the APR information for both federal and private loans. So actual loan interest rates could vary because sometimes we're using self-reported credit, but at least it's going to give you a better gauge and can point people in the direction of whether or not parent or private loans. I know someone had asked a question previously about parent private loans versus federal loans. And so you can use this to actually get some information about the interest rates. So just a little bit about what that is. It's at QuatroMoney.com. Now I'm going to actually go into a few more questions, and then I'll throw it back over to you, Mo, to see if there's any additional questions. So this is really our question period, guys. Please ask what you'd like. I'm going to try to address some of the ones that people asked about in advance. The one that I saw like multiple times was this first one. How can I assess the financial stability of a college? So probably the best is going to cost money, and most of us won't find that Moody's rating system is a bit cost prohibitive. So I think if you want to, I would look at Forbes 2019 college financial health grades. I think that Forbes will do this. They've been doing it for the last couple of years, so I assume that they'll do it. There's nothing that's going to be reactive enough based on the COVID experience that will be able to give a good grade assessment, because a lot of the schools are still in the midst of spending emergency money. Some of them are having lawsuits because basically they haven't refunded any money to college students, or maybe the class actions don't think they've refunded enough money. So just to put out there, this is going to be a gauge of financial strength. It will help you to understand some that were already having financial issues. If a school was already having financial issues, it's only worse. I was on a call, I don't know if any of you guys know GSB ASU, they do a summit that is typically in March, was canceled, as so many other things. They had some series in a virtual summit, and one expert who followed along, but I think the comment from the CEO of Chegg, textbook seller, he actually thought it would be 25% of colleges are going to fail. In part, it will be accelerated because of this. I've heard other experts say, you know, there are going to be varied numbers, and some of them will happen over the next 10 years. But we have already seen at least 4 schools that I know of have already announced closures and have attributed it in part to the COVID experience. Financial aid outlooks for students on wait lists. Actually, I already addressed this. Make sure they apply. Some schools will give money. Some merit money is going to be offered. Some of it's really because they're doing tuition discounting, because we're looking at 20% reductions across the board in enrollment, because some people will stop out, take a leave, take a gap year, may not enter into higher education, or use other online alternatives that are more certificate oriented, or just education without towards a degree. Other questions? Parents wanting students to have some responsibility. So if you're financially secure enough and can pay, but want the students to still have some piece of it, always suggest work. Work, even if people are not eligible for work study, there is a ton of on-campus jobs and off-campus jobs that people are eligible for. I've seen a lot of parents who say you have to pay for your personal expenses and or travel as a way of giving the investment as a part of paying for some of their costs. Others are, encourage their kids to take out a nominal student loan, sometimes because even as long as you are a U.S. citizen or permanent resident who completed the FAFSA, you should at least be able to take out a federal direct unsubsidized loan. And so this can be a good thing to also help a student build their credit. And but just so you know, having skin in the game, they're not going to really feel it as much because no payment is required while the student's in school. Another one, and then I'm going to throw it back over to you. A lot of questions, or at least a couple of questions about room and board refunds. Will college give them? There are a ton of schools, systems like the University of Wisconsin, University of Maine, Arizona State University, Amherst College. There are a ton of them who've given a portion of their room or board, or room and board, because some of them had policies that only dealt with housing, some of them did with their meal plans, and some of them had combo plans, but have given back millions of dollars to their students. But there are a ton of lawsuits for schools like Drexel, University of Miami, Boston University, Brown, I could go on, that are also facing it. The Arizona State system for NAU, ASU, U of A also all have class action lawsuits to ask for either more or ask for money to begin with. Just to give you an idea of what some of these refund policies are, so University of Arizona said that you could get a 10% refund now. You had to have active confirmation by a particular date, or then they would assume this a response. but 10% refund now or 20% off of next year. So that'll give you an example, but it's, once again, not one size fits all. So Mo, do we have any other questions?
Okay, Colleen, we just had one from Olivia. She is saying and asking, in regards to recommending students work, some colleges will take away some of the financial aid offered if the student has an income, i.e. at Case Western, if a student makes $12,000 a year, they will get $2,000 less in financial aid. Is this common?
So it is true that colleges, particularly who give need-based aid, will consider a student's income as well as their parents for dependent students when assessing their aid. And we'll see that a large portion of the earnings that they have are going to be considered as being available to actually pay for their college costs. And they're going to assume that once you're working, that you're going to make similar amounts moving forward. So as far as the portion of aid, the example that you gave, I can very much attest that that could be the case. That's part of the reason why work study is preferable, because it is excluded from the calculation because it was a form of aid that was distributed. So one clarification for everybody, if you're doing work study, it is going to have a neutral effect, whether you used it or not, on your next year's financial aid offering. I still think that people win out when they work, and they typically have increased earnings, and it's not dollar for dollar for the amount of earnings. It is very dependent on the school and the school's resources as to the level of impact it's going to have on future amounts of aid. Happy to have additional discussions. If someone wants to give me more case examples, I can talk through that a little bit more.
So Colleen, Elizabeth says, what was that percentage of deductions?
Percentage of deductions?
I'm not sure exactly what she was referring to, but I thought I'd throw that out there in case you know.
I'm sorry, I don't know. There's a lot of ways you could think about deductions.
In college admit, she has added.
In college admit. I'm sorry.
Could you define your question a little bit more?
Yeah, if you would do that. While you're doing that, I just wanted to also say, someone asked for infographics and articles, so that might be able to help families. I'd love to once again do a call out for Smart Assets infographic for the stimulus checks. I want to also say that we put out infographics as well. I've also seen the College Board and the Department of Education who put out some nice infographics. So each of those also have either blogs or articles online, some of which you can sign up for. So those are some resources. Did we get a clarification on that question again? I'm sorry that I wasn't understanding it.
Well, here's what she says. She says, you had said there's a blank rate of deductions in number of students matriculating this year. She was interested in getting that stat.
Oh, so there is there's several articles. I think you could look at Inside Higher Education at the end of last week, posted that they are projecting 20% reduction in enrollments for next year across the board in higher education. There will be some winners and losers. They note that some community colleges are expecting to actually gain enrollments. Some schools are dipping further into their wait lists. Other schools are actually reopening their enrollment in order to try to target more students. So I think that's the one that she was asking, 20%, and you can look at Inside Higher Education's article from last week.
Okay, Colleen, I have one more from, oh gosh, where was it? Allison is asking, will merit aid be reduced going forward or used more to lure almost full
paying people? Yeah, so and I'm so glad this was also asked before. Schools will not renege on offers that they already have for merit aid. So I think you're going to see very, like it's going to be honored for 2020, 2021. But in 2021, 2022, I don't think you can assume that basically schools are going to offer the same merit programs. Of course, you're all aware of basically the suit that changed the NACAC rules for like going after students. I've already seen schools that basically are offering, a lottery for free tuition for people who are still like looking at their school, or free room and board for a year to entice people to go. In some ways, that's not exactly meritorious, but I think that we're going to continue to see people throwing money, but that may have ill effect on the lowest income people, because it's probably still not going to be enough to pay for everyone. So assume that basically we will still have merit aid programs that they will be given. They're probably, the likelihood is that they're going to be geared from an enrollment management model for people who are still going to pay more than what they're actually getting as a tuition discount. But there is going to be merit money. It's just going to be, some places it's going to be less, and some people it's going to be even more targeted to get their enrollment numbers and tuition discounting to a particular level. So I ran over time, so I'm going to throw it back to you, Margaret and Mo. I think we've had some really great questions. There's probably more that need to be addressed, but I'm happy to respond to people directly.
Colleen, this was such an incredible wealth of information. I am so appreciative. I really had no idea what we were entering into, with the exception of the enlightenment that you've given me over the last few weeks. So I think this was incredibly informative. These messages that are coming through on chat, I'm also receiving text messages and emails about how fantastic this has been and how much has been learned today. So we will send the video, the chat, and also your contact information so that people can resource you, and then maybe we can pull together another theme of these questions and do this again. Seems
love to.
Like we all had an excellent time, so let's do it again.
Yeah, awesome. Thank you everyone for attending, and I will reach out to you if you have a question. We'll respond to it.